Hello everyone. Welcome to my channel. Thank you so much for tuning in today. I'm genuinely excited to share something incredibly powerful that can change your financial future. Not tomorrow, not next month, but over the long run if you apply the principles I'm about to walk you through with intention and dedication. Today's story is how to become a millionaire through smart investing. And we're going to explore this topic deeply, step by step, like a conversation between friends who are serious about building wealth. When we talk about becoming a millionaire, this isn't about luck or shortcuts. It's about adopting the right mindset, the right habits, and the right strategies that real millionaires actually use, strategies backed by financial experts and investment research from around the world. The very first thing to understand is that wealth starts with your mindset. Before you make your first investment, you must believe it's possible for you, no matter where you're from, what economy you live in, or how much money you have right now. Because the journey to financial freedom begins with a decision and disciplined action, not just hope. When you think about becoming wealthy, think of it as a marathon, not a sprint, because investing is a long-term game, where patience compounds your gains quietly over the years, and consistency builds your future wealth more reliably than trying to time every market fluctuation. Research shows that effective investment strategies focus on broad, diversified portfolios rather than chasing get-rich-quick schemes, because diversification reduces risk and allows your money to grow steadily across different asset classes like stocks, bonds, real estate, and more, spreading risk so that one poor performing asset doesn't wipe out your entire portfolio. Globeinsightblog.com. Plus one simple but powerful way investors build wealth is through index funds and ETFs, because these investment vehicles allow you to own a slice of many companies at once with low costs and built-in diversification, matching the performance of entire markets over time. And this kind of passive growth strategy has helped countless everyday investors turn modest contributions into life-changing sums over decades. Bank rate. Coupled with this is the essential strategy of regular, systematic investing. The idea that instead of trying to guess the best time to buy or sell, you invest a fixed amount consistently, for example, every month, regardless of market ups and downs, which smooths out your average purchase price and reduces emotional decision-making, a method often called dollar-cost averaging. Nasdaq. Now, let's talk about starting early and letting time work with you, because one of the most valuable assets in investing isn't money, it's time. The earlier you begin, the longer your investments have to grow through compounding, that magical process where your earnings generate even more earnings over time. Financial experts emphasize this again and again. Even small monthly investments started early in life can grow into substantial sums if left to compound for decades. Nasdaq. And even if you start later, the principles remain the same. Consistency and patience become your best allies as your money accumulates and grows step by step, year after year. Alongside disciplined contributions, smart investors understand the importance of saving before investing, meaning you build financial stability first by creating an emergency fund, managing and paying off high-interest debt, and freeing up as much income as possible to channel into investment rather than unnecessary spending. This financial foundation ensures that one unexpected event doesn't derail your entire journey, because if you have to sell investments during a downturn just to cover expenses, you lose growth and momentum, which is exactly what steady investors try to avoid. Forbes. A critical part of becoming a millionaire is also diversification, because putting all your money in one place is like betting everything on a single stock or company, risky, unpredictable, and stressful. Instead, spreading your investments across a mix of asset types and global markets smooths out volatility and protects your growth trajectory over time, something financial planners recommend as a cornerstone of wealth building. Blog.net. And within this diversified mix, many successful investors also include income-producing assets, such as dividend-paying stocks, rental property, or bonds. Assets that generate cash flow you can reinvest to accelerate growth or use to support your lifestyle without touching your principal. Globeinsightblog.com. As your portfolio grows, it's also important to rebalance regularly, which means adjusting your investments to stay aligned with your goals and risk tolerance as markets change. For example, if stocks outperform other assets and make up too large a share of your portfolio, rebalancing lets you sell a part of that position and buy more of what's underweight, keeping your strategy on track for long-term success. Wikipedia. Another nuance that many millionaires leverage, especially in countries with tax-advantaged investing vehicles, is the use of tax-efficient accounts. When you invest through retirement accounts or specialized savings accounts, your money grows either tax-deferred or tax-free, meaning more of your returns stay invested and compound over time. Whether it's a 401(k), an IRA, or an ISA in the UK with tax-free growth and contributions, using these tools efficiently can significantly boost your net wealth over decades by minimizing the drag of taxes on your investment returns. Money Week. But remember, while tools and accounts are important, the mindset and habits you develop matter even more, and this includes discipline, patience, and continuous learning. Successful investors don't chase every hot tip they see on social media. They do their homework, they understand the fundamentals of what they're investing in, and they avoid emotional decisions driven by fear or greed. Research and thoughtful planning reduce mistakes and increase confidence, helping you stick with your strategy even when short-term market movements seem scary or unpredictable. CompoundRealEstateBonds.com. One more underappreciated habit of wealth builders is that they automate their investments so that putting money toward their future becomes effortless. By setting up automatic transfers from your paycheck or bank to your investment accounts, you make investing a priority rather than an afterthought, helping you stay consistent without having to remember to act manually each time. Bankrate. Let's also talk about taking calculated risks in the right amounts. While diversification and long-term holds are the backbone of smart investing, allocating a smaller portion of your portfolio to higher growth opportunities, such as emerging industries or technologies, can potentially accelerate your wealth if you've done your research and truly understand what you're investing in. Successful investors balance this with caution, ensuring that high-growth bets don't jeopardize their entire financial plan. Globeinsightblog.com. As you build wealth, another powerful concept you'll encounter is living below your means. True millionaires often avoid flashy lifestyles that drain wealth. Instead, they focus on investing first and spending later, understanding that each dollar invested today can be many times more valuable years down the line than a luxury purchase today. This discipline of prioritizing wealth creation over consumption is one of the most significant differences between accumulating wealth and merely earning a high income. Smartasset.com. And as your wealth grows, consider creating multiple streams of income, such as side businesses, passive income from dividends or rental property, royalties, or even digital creations. Because diversifying your income sources can accelerate your ability to invest more and build financial resilience, reducing dependency on any single source of earnings. Forbes. Ultimately, becoming a millionaire through smart investing isn't about one secret trick, big breaks, or perfect timing. It's about adopting timeless principles. Start early if you can, invest consistently with a long-term perspective, diversify broadly, educate yourself, automate good habits, protect your capital with an emergency fund, and align your lifestyle with your financial goals. When you combine these elements with the patience to let time and compounding work for you, You put yourself on a path that has created millions of investors' wealth around the world, and it can work for you too. Thank you so much for staying with me through this deep and honest exploration of smart investing and wealth building. If you found value in this story, please like and subscribe to my channel, share it with someone who's serious about their financial future, and leave your valuable feedback in the comments below because your support truly helps this channel grow and allows me to create even better content for you. Your journey to becoming a millionaire starts with a single decision to begin, and I'm honored to be part of your first step.